It's Fed week and we see gold weaker this Tuesday. The Fed may hold off on raising rates this week because markets are volatile. That seems to be the theme. Joining us now from the CME is Senior Market Strategist for RJO Futures, Phil Streible. Phil, thanks for being back with us.
Thanks for having me.
Well, as you know, we always start with a gold chart. And what do you make of this metal's movement ahead of this week's highly anticipated FOMC meeting? How much could a rate hike really weigh on the metal here?
Well, looking at the last few days, I mean, gold has been quite quiet here. It's really been muted. The market was a little bit weaker. We saw one dip below 1100. It looked like some people came and snatched that up. Market remained above 1100. I think we're going to stay kind of in a tight range coming into the meeting, and then I anticipate volatility to really pick up. I think that the range that we're at right now is 1120 on the upside. That's going to be a key level of resistance, and it's also your 50-day moving average. I would think some kind of spike up to there, and also on the downside, I think we're going to see a spike down too. So definitely volatility. I think it's going to pick up coming into the actual decision. The downside being 1080, I think that's a key level of support. If you look at some of the outside markets here, we saw bonds move about 2-handle, and we saw the S&P up about 25 points. So traders are anticipating now that the Fed, they have waited so long, they've been so patient, that they are actually going to take some kind of action here. So I was really surprised to see not much movement in the gold market over the last couple of days, but we're definitely seeing traders readjust in these other outside markets.
Well, Phil, what do you think? Do you think the Fed will raise rates, and what ramifications could we see in markets if they do?
I mean, based on today's action, I think that the possibility of them raising rates is quite likely. I think that coming into it over the past, I think that, like, if you rewind back, I think they definitely missed their window on doing it. Then we saw the volatility, the problems with China, slowdown, all these issues, 1,000-point move in the Dow Jones, just all kinds of craziness. I think that prevented them from doing it. Now we're starting to see some stabilization in the market. We're also starting to see some of the economic data is a little bit more, in line with expectations. There are some small issues out there that are going on, but I think that the Fed, they have an opportunity here to act. And like I said, I think some of the other outside markets had priced that in today. So I'm leaning a little bit more in favor of the Fed most likely raising rates here on Thursday.
Well, you mentioned it, and also last time we spoke, you mentioned that aside from the Fed, there were outside factors affecting gold, like the weakness in China. How do these outside factors look for gold now?
Well, we saw the thing with China right now is that when they do have quite a bit of problems here, they do have weaker data, or you have just some crazy factors going on over there. They have been able to take some decisive action, whether it is lowering their threshold here for people to have in savings, whether it is pumping money into the economy. They are going after several different firms here that may have abused some of the measures for accounting. So, there's been some problems. They are starting to resolve some of those problems. I think that China, their economy is starting to kind of base out. I don't think it's in that free fall that we've seen before. So that's been one of the largest factors. I think that it is being contained. It's not, completely healed. It's a patient that's, coming out of life support right now. So it is showing some signs of stabilizing.
All right, Phil, to wrap, what are some plays you would look at for gold investors on this busy Fed week? How could investors look to make money with the metal here?
All right, if I was going to play this market, I'd most likely think that the market is going to make one large move or the other. You could do two things. Again, this is based on everyone's risk tolerance, size of account, things like that, all their parameters. I think you either got to look at something like a straddle around the 1100, where you're looking at a call and a put, which is probably going to be quite expensive. You'd end up looking at buying this thing, so you have calculated risk. Market's got to make one big move in each way or the other. Or you play the ranges. You play that 1180 call, or the 1080 put, and you look for the market to break through one of those levels. I think that support is going to come in around 1080 on the gold market. So I'd like to look at the long side from there. I think that the problem is that if the Fed does raise rates, they're going to have some ramifications in the economy, and it's going to cause some people bidding for safety. So that's the way I would play it here. But again, every person is going to have different parameters based on their own tolerances.
We'll see what happens. Phil, thanks so much for joining us today.
Thanks for having me.
And thank you for watching. We'll be talking mining next with the editor of Daily Gold. Stay tuned.